Good morning, all. This is Paul from CamelbackTrading.org coming to you this Monday morning, April 7th. We are looking at Window Trader's market profile of the ES and NQ. So I'm going to put some basic things out there. Okay? This will be day 3 of the market selling off. Long-term money generally doesn't last only 1 or 2 days. We had our largest range and highest volume in at least 2.5 years on Friday. We have a huge overnight again, another possibility of a huge gap. The market, right, will stop selling when the sellers exhaust themselves. That's it. They're not going to stop if the Fed says something or anything else. The market, when it exhausts itself, will come into some sort of balance. Okay, you really have to understand that. I have not traded. Look, I'm a day trader, although I love looking at the bigger picture and need to know the bigger picture. I haven't made a trade Thursday and Friday in A period. Why? Because I need more MGI to start forming to see if the selling's going to continue, or if you do try to get some kind of relief rally and short covering rally. We have had tremendous push off the days or overnight lows. That's positive. However, that also means your yearly low is in the overnight. Those rarely hold, just like all-time highs in the overnight rarely hold. An overnight low for a yearly low rarely holds. So keep that in mind. The biggest thing that possibly tells you this market is going to stop selling is when Jim Cramer is talking about today being possibly 1987. All you're going to have are these pundits and so-called experts spew absolute verbal diarrhea all over the place. Okay? We always give you both sides of the picture here. The only way anything changes, and for those of you who have followed me will know this, is for the market to come back into balance. Plain and simple. For the market to start any kind of balancing procedure, you need to take out a daily high. Well, right now, it doesn't look like we're doing that, at least this morning. So for now, the sellers will be in total control of all 3 time frames. Staying calm, cool, collected, no yelling, no screaming is how you should approach any trading day, but more so when the market is doing this. These are great opportunities, but you have to let them form. You have to let them form. Okay? I think just pulling the trigger at 9:30 is a coin flip. Market's totally short. Do we get a inventory adjustment, or do we open and drive straight down because the selling's continuing? Well, why don't you wait and find out? There's no harm in that. Okay? Righty right now, looking to gap lower, but much, much smaller gap right now. It's only about 11 handles. ES and NQ still huge gaps. And that's coming way off the lows. We're off the lows in ES. 48.32. We're trading at 49.82. That's 150 handles. Okay? We're $15 off the lows. Impressive, right? However, we're still 17 handles, or 170 handles, off the gap fill. So what does that tell you? You're smack in the middle, basically. Well, you're higher than overnight half back, but it's still a large gap, and it's still very, very far away from the overnight lows. So what do? We wait for more MGI, see what happens in A period. Now, if we go to take out the overnight high in A period, or overnight low, I will absolutely take that opportunity. Okay? But if not, the odds of me taking a trade in A go down substantially. Okay? Again, the best I can tell you is to join this trading room and see what we're all about, and see how calm, cool, and collected we keep things as we give you both sides of the market at all times. Okay? Now, obviously, the last 2 days really has just told us to look for shorts. Possibly this morning, same thing. You're going to have value, gap, and indices in favor of the bears to start again. Okay? Doesn't mean it can't change, but for now, that's what you're going to have. To give you any kind of game plan right now would be silly. That's why at 9:15, once I get on the mic, we start going over this with the trading room. Now, chart-wise, the only thing to show you right here, well, I don't want to show you that, but let's look at this. 4.8 million in SPY, 3.5 million in triple Q. So very good volume. So look, here's your chart, right? We could even look at this whole picture here. Once we got below the 200-day moving average, was basically, and went down, then came back into balance, then went up, came down, balance. But the bottom line is this. From March 7th through last Wednesday, for the most part, the market was in a big balance, right? And they failed on that 3-day attempt to get back above the 200. And now Thursday and Friday, the long-term money came in. We said that was going to happen. We didn't know which side it was going to be. I thought it was a good chance that it would come in one way or the other, either below the 200 or as buyers above it. Well, for now, they came in as sellers below it. Okay? So, again, you can't look at price and say we're down too much. No, that's not how it works. The selling will stop when it exhausts itself. The thing with long-term money is there's a lot of selling going on because they come in the herd mentality. So until it takes longer to exhaust themselves than short-term money. So we'll see how it plays out so far today. Good luck trading today. Thank you so much for liking and subscribing to this channel. And we'll recap at 4 p.m.